You feel it, don't you? That cold certainty that someone somewhere is playing a game with your money. You buy a stock after careful study, it seems sound, the story is perfect, and the moment your order is filled, it begins to slide. Or you sell a stock to lock in a small profit, tired of its sluggishness, and the next day it gaps up and runs 100 points without you. It feels personal. It feels like an invisible eye is watching your account, waiting for you to make your move, just so it can take the opposite side and profit from your pain. You think the game is rigged. You whisper the word manipulation to yourself, a comforting excuse for your losses. Let me tell you something. You are right about the manipulation, but you are wrong about everything else. It is not personal. You are not important enough for the great forces of Wall Street to single you out. The game is not rigged against you. You are simply a pawn, and you don't even know the rules of the game you are playing. The public's mind is the primary target of the large operator. Your greed, your hope, your fear, these are not your private emotions. They are commodities to be cultivated and then harvested by men who understand them better than you do. The human flaw is the desire to get something for nothing. The public wants to be told what to do. They crave tips. They yearn for inside information. They want to believe that wealth can be had without effort, without study, without the mental anguish of true speculation. And this desire makes them predictable. It makes them the perfect counterparty for any large-scale stock market operation. A manipulator, a true professional operator, does not create a trend out of thin air. He simply capitalizes on the conditions that exist. He foresees the inevitable and helps it along. His greatest ally is the public's inherent laziness and avarice. Let me take you back to a time when the ticker tape was the only screen a man watched. I remember a case, a stock called Consolidated Steamship. It was a classic operation, a masterclass in the art of distribution run by a very able pool manager. This man and his associates had, over time, accumulated an enormous line of this stock. They bought it quietly, carefully, without causing a ripple on the tape. Their problem was not in the buying, their problem was how to sell it. You cannot simply dump 100,000 shares on the market. You would crush the price and destroy your own profits. You need a market. You need buyers, eager buyers. So, how do you create them? First, you make the stock look strong. The pool began to mark up the price. They would trade shares among themselves, pushing the price a point or two higher each day. The ticker tape, which tells the story of the market, began to sing a beautiful song about Consolidated Steamship. The public, always watching for action, saw this. Here was a stock that was moving, that was alive. Then came the second stage, the publicity. The pool operators were not shy about using the press. Favorable articles began to appear in the newspapers. They spoke of the company's bright future, of its hidden assets, of whispers of a merger. The news was not necessarily false, but it was timed perfectly to coincide with the rising price. The combination was irresistible, a rising stock price and a flood of good news. What does the average man do? He sees his neighbor getting rich. He hears the stories. He feels the pull of greed. He forgets all caution. He believes he has been given a golden tip straight from the horse's mouth. He rushes to his broker and buys Consolidated Steamship. He buys it at 60. He buys more at 70. He pyramids his hopes, not his profits. And who is selling it to him? The very men who started the move. The pool was distributing its line. They were feeding their shares to the hungry, clamoring public. Every share the public bought was a share the pool was glad to be rid of. The stock reached 90 and the public was euphoric. They saw only blue skies ahead. But the pool manager saw something else. He saw that the public's buying power was becoming exhausted. He saw that his own supply of stock to sell was dwindling. The operation was nearing its end. The publicity stopped. The aggressive buying on the tape ceased. The stock stopped going up, it faltered. For a day or two it did nothing. The public, now fully invested, held on with hope. Then the selling began in earnest. Not just from the pool, but from other professionals who recognized the signs of distribution. The stock that had been so strong suddenly had no support. It fell. It fell faster than it had risen, because fear is a much more powerful motivator than greed. The public that had bought at 70, 80, and 90 now panicked and dumped their shares at 50, 40, and 30, selling them back to the very same interests who might one day decide to start the whole process over again. The public blamed their losses on a bear raid, on a trick. They never blamed their own gullibility. They never understood that the entire bull market they had so enjoyed was a carefully constructed piece of commercial salesmanship designed for one purpose: to part them from their money. This story isn't just a relic from a bygone era of gas lamps and ticker tape. It is a blueprint. The machinery is more modern, the news travels at the speed of light, but the human engine that drives it is unchanged. That's why, if you want to understand the true psychology of speculation, you must read the one book that defines the game. I am talking about Reminiscences of a Stock Operator. It is not historical. It is a permanent education in human nature and market cycles. The book is pure truth. Get your copy today. The link is in the description below. So how does this play out today in your world of glowing screens and instant information? The principles are identical. The big money, the institutions, the hedge funds, the modern pools, still need to accumulate and distribute large lines of stock. They cannot operate in a vacuum. They need the public. The game has simply become more sophisticated. The newspaper article is now a viral social media post, a well-timed research report from a supposedly independent analyst, or a series of appearances by a charismatic CEO on financial television. The tape is the 24-hour news cycle, the endless chatter in trading forums, the constant stream of data designed to overwhelm and confuse you. Think of a popular technology stock. Let's call it Next-Gen Innovations. The company has a compelling story but questionable fundamentals. A group of large players decides it is ripe for an operation. They begin to accumulate shares quietly in the lower price ranges. You wouldn't notice it unless you were watching the volume patterns very closely. They are patient. Once they have their line, the music starts. Suddenly, Next-Gen is everywhere. Analysts who were neutral on the stock suddenly issue strong buy ratings with fantastical price targets. Articles appear praising its disruptive technology. The CEO makes a series of media appearances, promising a revolution. The stock begins to move. It crosses a key psychological level, say $100 a share. This is the signal for the public. The chatter on social media ignites. People who have never analyzed a balance sheet in their lives are now experts on Next-Gen's potential. They feel the fear of missing out. The stock rises to 120, 150, 200. The public is in a frenzy, buying with reckless abandon. They are not buying the company. They are buying the hope of a quick profit. They are buying the story. And all the while, the original operators are quietly, methodically selling their shares into this manufactured strength. They are not dumping them all at once. They are feeding the ducks while the quacking is good. They sell a little at 150, more at 180, and the rest on the final climactic surge to 220. Then, just as with Consolidated Steamship, the music stops. A slightly disappointing earnings report is released. A key executive leaves. A competitor announces a new product. The reasons don't matter. What matters is that the professional support for the stock is gone. The big sellers are finished. The only ones left are the public, holding shares at inflated prices. The stock begins to drift down. The first 10% drop is dismissed as profit-taking. The 20% drop causes some anxiety. The 40% drop is a panic. The same people who stampeded to buy at 200 now stampede to sell at 120, desperate to salvage what they can. They lost money. Why? Because they mistook a manipulation for a genuine bull move. They listened to the stories instead of reading the tape. Your defense against this is not to become cynical and distrust everything. Your defense is to become a student of the market's behavior. The tape does not lie. Price and volume are the ultimate truth. A real, healthy bull market move is broad. Many stocks in the leading group advance together. A manipulated move is often narrow, focused on one or two story stocks. A healthy advance is accompanied by strong volume on the way up and light volume on pullbacks. A manipulated move might have huge, churning volume near the top, a clear sign of distribution as the big players unload their shares to the public. You must learn to think like the operator, not his victim. When you see a stock being touted everywhere, when the story seems too good to be true, be suspicious. That is not a signal to buy. It is a signal that the distribution phase may be underway. The public is being invited to the party just as the hosts are preparing to leave. Your job as a speculator is not to discover some secret formula. It is to identify the line of least resistance and follow it. The manipulators are very good at creating a clear path upward when they are accumulating and marking up a stock. Your task is to ride that path with them, but you must be prepared to get off the train at the first sign that it is slowing down. You cannot afford to ride it all the way back to the station. Do not try to be a hero. Do not try to short a stock just because you think it is being manipulated higher. You can go broke betting against a pool with deep pockets. As the old saying goes, the market can remain irrational longer than you can remain solvent. Instead, wait. Be patient. Let the stock prove itself. Wait for what I called the pivot point, that moment in price and volume where the character of the market action changes, signaling the start of a major move. If you see the signs of accumulation followed by a clear markup, you can choose to participate. But you must do so with your eyes wide open. You are not an investor in the company. You are a speculator, betting on a move orchestrated by others. You must have an exit strategy before you even enter. You must know the price at which you will take your loss if you are wrong. This is your only insurance against financial ruin. The great mistake of the public is that they personalize the market. They think the market is out to get them. The market doesn't even know you exist. The manipulators who run these campaigns are not evil geniuses plotting your individual demise. They are businessmen conducting an operation. You are simply part of the raw material, the public demand, that they need to complete their business. If you give them your money through greed and ignorance, they will gladly take it. But it is not their fault. It is yours. You have failed in your duty to think for yourself. Stop looking for tips. Stop listening to the noise. The path to success in this game is not through finding a secret back door. It is through the front door with hard work, constant study, and brutal self-honesty. You must study the tape. You must study past market movements. You must study yourself and the emotional weaknesses that make you a target. Greed for a quick profit, fear of taking a small loss, hope that a losing position will turn around. These are the enemies within, and they are far more dangerous than any pool operator on Wall Street. The market is a battlefield of minds. The manipulator provides the music and the public dances. Your job is not to curse the musician. Your job is to learn the tune, to recognize the rhythm of accumulation and the crescendo of distribution. And then, you must have the discipline to leave the dance floor before the music stops. Because when it does, there are never enough chairs for everyone.